I have said it before, and I've said it before, and I've said it before, but I'm going to say it again. On gap down days, you look for an opening rally that gets sold to take the stock short to continue the move down. Let me show you an example yet again. This is SPY. We're on the 5-minute time frame this morning. We get a gap down. So on gap down days, the ideal scenario is to look for an opening rally that gets sold. So how can we identify an opening rally? Well, we see the basing here in the pre-market session, and we see the price action moving up. So it's making what along this way? Lower highs all the way down, right? Once that trend line is broken, it started to make higher highs. That is your opening rally. So what we can do is use the 5-minute time frame, use the 1-minute time frame, whatever you'd like to be able to identify an uptrend. Now we're going to use the trend line break strategy. I detailed this strategy in another video. I'll put the link to that video in this description if you don't know what that is or how to utilize it. But basically, all we're doing here is drawing a trend line across the bottoms of these candles on an uptrend to identify when this trend line breaks. Now, you have to be careful with your diagonal trend lines because you can potentially draw them with a bias, but you need to make sure that you're connecting the lows to each each dip. So low connected to this dip, connected to this dip, connected to this dip. And you notice I'm not giving a lot of weight to these little wicks that are dropping below. I'm kind of focused on where these candles are closing. So we get the move up on SPY. So here's market open. We get the move up on SPY, right? And into the high of day. So if this move is to sustain, then what we can also utilize is support and resistance strategy, where each prior resistance here should validate as a support over here. That is invalidated on this breakdown candle here. So not only do we have a break of this static line of support that I just drew, but we also have a break of our diagonal line, which is our dynamic point of support as well. And all of that is occurring on this one single candle. So leading up to this trade within the Discord server, I sent this out multiple times. I'll go to the alert room so we can just, get to it. Something else worth noting, SPY trend line here, right? And I sent that out at 9:47 a.m. So before this even breaks down, before we even get a breakdown on the SPY trend line, I'm posting this for you. I said I loaded SPY short for the trend line break here. I give you the exact contracts. 1 minute later, I say SPY worth watching, right? Because now we're starting to get that trend line break. And by the way, this was posted at 9:47. This was posted at 9:50. So 1 minute later off of this, when I give you the contracts, I'm re-alerting it. SPY worth watching. Valid for a short idea if this stays under 387. Why? Well, because 387 during all of this consolidation is going to be your point of resistance, right? So if that resistance line is broken, then this is not going to be validated as a short idea, and it's actually pushing back higher. So we're going back to the alert room. Took SPY entry short, 9:51 a.m. I give you the contracts, I give you the stop loss, I give you the fill price, and I say manage your risk. That's going to be right here on this candle. So I waited 1 more minute beyond this. I tried to take it at the top. I wasn't quick enough to get a nice entry at the top. I think I got an entry probably halfway through this candle or so. And then it's just a matter of holding the position, right? Stop loss placed up here at 387. So entry there, nice low risk stop loss there. Wound up selling the position as it fell into low of day, right? Fell into the low of day for a 20% gain. Gap down days, you look for opening rallies like this to get sold to bring the stock back down. Why is this the ideal scenario? Well, when we trade with what the overall trend is, what the prevailing trend is, we increase our chances of being profitable on a day trade by sticking with the macro trend, with the larger trend. So obviously, if we move this to the 5-minute time frame, the macro trend most recently is down, right? So all of this price action occurring, all of this selling occurring in the pre-market, naturally, there's going to be some sort of relief rally. Now, not always, but naturally there will be. And that's just to relieve some of the selling pressure. Some of these maybe short sellers taking profits, people trying to to go long at the open utilizing a strategy known as a dead cat bounce, right? So a lot of reasons why this could pop at the open, but the macro trend is down. So we don't get faked here. Try not to get faked on these opening rallies on gap down days, and instead just try to stick with what the larger trend is. So yeah, nice break here today on SPY utilizing the trend line break strategy. Again, the link for that video is going to be posted in the description of this video. Utilizing the trend line break strategy and then utilizing the break of the previous resistance that then flipped to support. You know, we got the break of the dynamic support and static support all at the same time, went short and capitalized on this for the move down. So I hope the video's helped you out. Press that like button for me if it has. This is how you trade gap down days. Ideally, you won't always get the opening rally. Sometimes you'll get an opening fall, which makes it even more difficult because the stock feels extended at that time. Sometimes you'll get opening consolidation and chop. You know, all of those ways are traded a little differently, but on gap down days where you do get an opening rally, this is the ideal scenario to look for. Thank you for your time. Press the like button for me. Subscribe to the channel if you haven't done so already, and I will see you all in chat. Take care.